Hello and welcome to Connect and Collaborate. I am Alex Hopkins, your on-air producer, and today we are kicking off our conversation on real estate, both commercial and residential, all week. And I have two experts in studio here with me today to talk about it. I have David Schlatter of David M Schlatter Real Estate and John Roberts with Banyan Real Estate. How are you gentlemen doing today?
Excellent, Alex. Thanks for having us on the show.
Yes,
doing well. Thank you very much.
Yes, and I'm excited to have you guys kick this off. But before we get started, I have to ask my audience out here to make sure that they sign up for our newsletter at cobrt.com. Check out our events page while you're there. Check out this podcast and more at cobrt.com/radio-podcast. So thank you for letting me get that shameless plug in there. I appreciate it, fellas. But let's start out with a little bit. I called you experts, and that is for a reason, right? You both have a little bit of time behind you here in the real estate industry. So, David, if you don't mind kicking us off, telling us your background, why real estate, how long you've been doing it, and what you got going on currently.
Well, Alex, I've been in commercial real estate for 20 years or more, and I focus mostly on industrial, but I'm very familiar with the office product as well as the retail components, and to be able to understand that, as well as the multifamily, which is the investment component to commercial in its broad sense that ties into residential that John will talk about in a minute. But I've out and focus on the ground and the real estate, both in terms of listings at times, in terms of selling land or selling buildings, but also finding buyers and tenants for properties. In particular, this past year, as a matter of example, I go out and I do networking at various things. I'll be in D.C. next week at an international trade fair for businesses all around the world that come and look for property here. I was there last year, and we had a Canadian company that came down, and I was able to help them through a build-to-suit process here and bring 15 jobs in that case. I'll be doing that again. So I continue to do that and work locally, and that's the focus is mostly industrial, but I'll be in the other spaces as well.
Nice.
Yeah.
All right. And how about you, John?
My background came from my college degree where I studied architecture. Never really intended to be a broker, necessarily. I got that interrupted with some military service. I was in the Army. Yeah. Moved out to Colorado, and the gentleman that helped me buy my house said, "Hey, you're studying real estate at the University of Denver." I was doing the master's degree there in real estate construction management. And he said, "Get your license." I said, "Okay." And so I kind of fell into that, fell in love with self-employment. That was in 2001. So I've been doing this about 18 years here in Denver, 17 years. And I took up home building. That's another thing I do. I took that up starting in 2011 when the market was starting to come out of the recession. So I've built 13 homes in the last 5 years, and I have 24 homes in some phase of design or construction or permitting.
Nice. See, I'm glad I brought you guys on to kick off this conversation. So, as I said, we are talking both commercial and residential. Do you mind doing a little bit of a definition of what each of those means? Because we were talking before the show started, and apparently multifamily homes are considered commercial more so than residential, and I never thought about it that way.
Yeah, well, for sure. Alex, thank you. The commercial has basically four branches that's traditionally known as, and that is industrial, office, retail, and multifamily. Multifamily is really apartments, and whether those are 5 units or 50 or 500, that's the area that's non-owned property, as it were. It's investment type properties that somebody wants to own a product type that happens to be people that live there in residences, as opposed to what John focuses mostly is single family homes, whether they're compact townhomes or other things. But so the commercial area does include the residential pieces, but it's really in just one specific area of apartment types of properties.
Okay. Does that include duplexes then too?
Yeah, it goes down there. Sometimes in that regard, somebody may want to own their own home, apartment, but then have another adjacent room next to them with an investment. You can do that with SBA financing up to 4, but typically it's anything above, it's 5 and up, that would be more the multifamily in that broad sense of the word, as opposed to single family homes, which is what the residential is typically tied to.
A lot of it's driven by the financing. Banks just look, they draw the line at 4 and under and 5 plus. So typically the financing realm is what's distinguished commercial real estate from residential real estate in multifamily.
Okay. See, I'm learning so much already. So let's talk a little bit about the current state of the market. Both sides, right, are really hot right now, particularly in Denver. It's a big market. I know that we are short on inventory at this point, right? We can't build fast enough. We're not getting building permits fast enough. So give us your opinion. Give us the outlook. Tell us what's going on.
Well, I'll lead with the commercial side, Alex, and that John follow up on the residential side. We hear a lot about the residential side in the news and the concern for affordable housing and so forth, and John will talk about that. But just commercial in general, it's been hot since we came out of the recession, and in case of Colorado, the marijuana properties of the law in 2012 really helped expedite things in an industrial sector. It's not the leader, it's just a significant factor that's actually, in my opinion, has plateaued a couple years ago, and it's still real strong, but it's actually helped to take away some of the lower quality, older warehouse buildings that then allow for rates to go up in general, for Class A properties to be built. And as the economy overall has grown, say from 2014 forward, and it's red hot right now, Class A property, industrial in particular, but other classes, office, retail, and so forth, are equally as hot. And we've got very large announcements of plans over the last number of years, 500,000 square feet, 700,000 square feet, single buildings. It's a huge phenomenon. It continues to go, and my thoughts, we'll get into it later, is that there's nothing to stop it, particularly as it relates to the economy in general and some of the tax cuts impact that we'll talk about later in the program. It's hard to project when it will end. It's just red hot, all sectors.
Which is exciting.
Housing market's definitely red hot. Anyone out there that's been looking for a place to buy has experienced it. It's pretty much been that way since coming out of the recession. You could call the bottom of the home market probably about 2008, where it hit kind of bottom. One of the fascinating things about Denver is that we really didn't take a big fall.
Really?
About 10 to 15% overall. I actually tell people there are neighborhoods in Denver that did not have a negative year during the Great Recession driven by a housing glut.
Wow.
That's how strong Denver is that there was actually neighborhoods that did not have negative year. A lot of people don't know that.
Yeah.
But currently I'm going to share the one quote and statistic I always tell people, because everyone wants to know about, it's a bubble, where's the end of the cycle? It's been a long cycle. There's no question about that, not denying it. I'm looking for cracks in the armor every single month when the reports come out, but it's driven by supply. Home supply, and I put this in the context of population. In 2008, when the population may have been about 2.25–2.5 million people in the metro area, there were 30,000 homes available on the market. The 10-year running average since that time, just the 10-year running average, is about 16,000 to 17,000 homes available to buy. Today, we have about 5,000, maybe 6,000 homes available to buy. Just put that into context. Until that changes, I don't see relief in sight.
Yeah.
It's a supply thing. If I just cut in on that, John can embellish further. It's not only a supply thing; it's a demand thing, and it's a good problem to have. Most people I read the papers. I'm a residential homeowner, and I'm concerned about those things. I'm interested in those things. I like to see appreciation. I'm concerned about first-time home buyers being able to buy, and I'm sensitive to those things. We've got the lowest financing rates it's ever been. By maybe it's gone up a point, but my first home I bought many years ago was 7.5, 7.75. I mean, it's dirt cheap, under 5%. So there's a sensitivity to it, but the price of real estate has gone up because Denver is so sought after. Colorado is so sought after. And I frame it as a good problem to have. Not always a bad thing that we have to figure out subsidies and so forth. It's a good problem to have. Hopefully incomes go up and so forth to match so that people can be able to buy it. But once you're in, you're seeing appreciation go up, and it's a very good problem to deal with. It's fed by the economy, where there's jobs that people keep coming here for. John alluded to the fact that Denver hasn't really gone down. I'm originally from Oregon, and when that recession hit, we saw a 50% drop in value across the board over a couple-year period.
Yeah.
So those things have hit other states, Nevada, California, Florida, and some other places, but Colorado and Texas and some other states are one of those that have been much more modulated or moderated in terms of its drop, if at all. As John said, a couple areas didn't drop at all. So There's some challenges that are going on, but it's really overall it's a good problem to have. Better to be going up and having problems than going down and having problems.
I would agree with you. Though I personally am ready for those prices to drop as a first-time buyer out on the market. Right? That's
Unfortunately, that's an answer I hear a lot, and people have put it off now for a couple years, and now it's just 10% per year higher,
exactly.
and they're still stuck renting.
Yeah.
You know, a good question to ask John, then, if I may, Alex, is the difference between what is loosely called in the media as affordable housing versus what the language around attainable housing, and dealing with your issue. How can supply be addressed, knowing that we keep having demand? People like yourself keep flying here and wanting to live here because it's beautiful.
Right.
But how is that problem addressed in a economic terms in residential?
Oh, just open up a can of worms with that question, Dave.
Well, dig into these worms for me.
The attainable versus affordable housing, I always like to distinguish the difference. Affordable housing is usually arrived around some type of government subsidy or regulation or law. And then attainable housing is the idea that it's market rate, that someone who has the average job can buy the average home. And there's definitely a disparity right now in the market. There's no question about that. But I do want to distinguish the difference between the two. But regarding the supply side that I know Dave brought up, I talk about it in I call it my LLCC. Land, liability, construction costs, and compliance. And I can go down each one of those of what is exasperating our market. Land, I'm referring to mostly zoning and the ability to do more units. There's only so much land in the Denver metro area. And zoning is a place where you can change how many homes you can bring into that land by actually changing the zoning. Because right now it's set and it's not, my opinion is that's not allowing enough. So if you want more supply, change the zoning to allow more units.
Okay.
So that's land. Liability, I speak to the construction defect issue that's been going on. That's insurance related. It's probably been in the headlines quite a bit. It's basically rendered condo construction to zero. It's probably 3 or 4%. Most metros are anywhere around 20 to 25%. Legislation did some stuff last year to change that. It was baby steps. Insurance industry has a lot to do with that. Letting that run its course a little bit, but it's a factor to consider. Construction costs. Something a lot of people don't realize. I started building homes in 2011. My bids coming in today are almost double on a per square foot basis for labor and materials or what it was in 2011. That's a scary thing, and it's affecting the home market. So any new construction is going to be super expensive because construction costs have doubled in 5-year period.
Well, last week I had the pleasure of talking construction in Colorado, and one of the big problems with that is the shortage in the construction industry, right? We have a lot of people that they need workers in the construction industry, and it's tough to find them. So we do know that there are AGC, they are partnered up and doing a program to get more students into construction. So hopefully we're going to see that work its way back into the housing
trade
market.
school internship that used to be of years 4 or 5 decades ago was something very common. We're missing it now. But just to share a quick story in labor, I'm in construction for 8 units near the Perry Street Light Rail Station in Denver. People know it. My general contractor tells stories about workers getting poached off the job site. Guy drives up in a truck. How much you making? Add 5 to that. Hop in.
Mm-hmm. And they'll go.
That's a regular occurrence.
Yeah, they'll go. Why not? $5 more an hour? Are you kidding?
Yep. And then my last one is my last C, my LLCC, is I call it compliance. It's just the idea of government permitting and regulation. My last project I built, 8 units also near the Perry Street Light Rail Station. When I brought them to market, they were the lowest priced new construction in the city of Denver. That took 2 years to go through the Denver city permitting process.
Wow.
Time is money. And to deliver that product to the market that's another place that things can be done to change those.
Yes.
And, well, do you currently work on any of those?
The compliance issues?
Yeah.
Certainly John does. I mean, he mentioned from last year in terms of the state law, we worked with our legislators and we hail from the South Metro area, and so the South Metro Chambers worked on those things and advocated for changes in the law, and we've done some fairly substantial changes. Some might argue be marginal, but working in the right direction. That's on the housing residential side. In terms of the commercial side, the market just keeps going, and that's a positive pressure. People don't like it. Tenants don't like it that are business, that are coming up for renewal and they're leasing their property, and many do. But that's just the fact of the market. Would you rather have it go the other direction, where people are leaving and you're having to close down because you can't afford you don't have enough sales and you can't afford. So it's just a function of the market. I would say that the do's and don'ts, one of the questions you had on your earlier inquiry, Alex, in terms of buying, to me, and John can play into it, on more people are going to understand the residential side, but that if you see a piece of property, you see a building, and you like it, the notion that let's negotiate and let's have this conversation, you're going to lose. Not always,
right.
but the chances in this type of market are very much so. And I'll just give you one quick story from last year. That the Canadian company that I had came out of the International Trade Fair that I attended last year, which I'll be doing again to bring business to Colorado, bring jobs to Colorado, and so forth, looked around, and we had the same problem that would happen in residential, and trying to find a building that exists and that's available in our time frame at even a reasonable price, let alone an exaggerated price we'll just take it because it's here now, rather than go through building a new home, in this case a new warehouse, and so forth. After a lot of checking and so forth, we went to the track of build-a-suit. And so we went through a competitive process. That was my job, to go and create the market, as it were, competition, in order to, even in the high growth area, to show there's differences if you've got a good solid tenant, in this case a Canadian company with a great balance sheet. And we created the best combination for the time. It wasn't cheap. And the message is do's and don'ts. If you see something you like, then you cannot worry about, is the market going to crash? It could crash tomorrow. It could crash in 5 years. It could crash in 10 years. It's hard to project, but if you want something, get it now, because if you wait a year, you've just lost another 10% in value creation. And John, you may have a similar story in the residential side, but that's my story on the commercial side.
Yeah.
I mean, I would. There's different do's and don'ts I could talk about, but just to piggyback on that, it's no different in the residential world. A vast majority of buyer clients I work with probably make offers on 5 or 6 properties today before they get one. They have to learn the hard way. The average, this is just metro-wide average. This isn't even high-demand areas or anything. Metro-wide average, the average home in Denver sells for about 1 to 1.5% over the asking price. Vast majority are selling first day, first weekend on the market. Do's are, as David says, if you want it, step up. Or spin your wheels and go back to renting, which is what happens to a lot of people. So a do is, I'm going to quote a broker that I read in another article, just because I thought it was fascinating to the residential world. She goes, if you find a property that meets 80% of your goals and criteria, offer, and offer strong.
Okay.
There's no perfect in any. I talk about how there's no perfect. I talk about multi-million-dollar home buyers. Their home's not perfect either. There's always something that they want to change too.
Yeah,
that makes me feel better.
Yeah, from a psychology standpoint, it just is a human level psychology standpoint that I work with clients on the commercial side, and John does on the residential side. It tends to be more reactive and more maybe understandable on the residential side. I'm not sure why exactly. John might embellish, but in terms of commercial side, you're moving a company, you're making decisions, and you're used to getting what you want because you've got this power of sales, this power of balance sheet, this power of a company, and this power of presence, and you're used to getting it anywhere. Oh, that's what they offer less, half that. And there's personal stories I could share, not just of mine, but of others who have said, just offer less. Yeah, and there goes another 2 years. You lost the opportunity, and it keeps going up. The message in that is in this type of market, will it change? It very may well change tomorrow, but I'm not counting on it. Those that I follow don't count on it, and that's in the stock market and other things. And consequently, if you want to get control, the issue is not, and I work with large corporations, multinational, global, in terms of doing this, as well as smaller entities and so forth, and persons, is that if you want it, it's not a negotiation as much on price if the price is generally reasonable. Generally, it's a negotiation on you getting it, and as opposed to, well, let's offer 10% less. Well, you just lost it. Because somebody else got it. So come in there with an attitude that's a stronger balance sheet, or in John's case, offer 3% more up front, because that's what's going on in the market. It's an attitude that you have to, if you want it. And if you don't want it, you don't want to play by those rules, you could say, I got a great deal in 5 years from now, and the market is just doubled in price, I'm glad you got a great deal, but you just lost 100% of value waiting 5 years.
Right.
Yeah.
Would you say that business people's egos are getting in the way of buying more?
Generally, and it's the job of in brokerage in part, but it's circumstances too. And so you have to show them, and it happens on the selling side. They have a property they want. It happens on the developer side. If you're having a developer work and they've got their ego associated with it, it happens on the business side, and ego, and you have to be able to demonstrate. And oftentimes it's, here's the price. Okay, we'll do that. And then you have to realize it's probably going to be a loss of time and effort because till they understand that they didn't get what they wanted. So then you're looking at something else. And I think that's probably the same phenomenon in residential too.
It is.
It is.
Oh, yeah.
Human
It's
nature.
no different. And I think the big difference that I'll only distinguish between the business side of commercial real estate and more residential is emotion. I mean, I'm sure there's emotion in commercial real estate because we're dealing with people, but when you're talking about someone's home, it's a very intimate place to them. There's an emotional drive that definitely occurs there for sellers, for buyers, and where they meet in the middle. But I can't stress enough the same philosophy that David talked about is that if you really want that home, you've got to step up in this market, and you've got to do things, not just price. You've got to waive contingencies. You've got to come stronger in your financial position. The whole love letter phenomenon is out there. There's definitely tips and tricks to the trade that can help you be more appealing, because the best home that best home is going to get 10, 15, 20. I've seen homes get 50 offers. Like, that exists. It's out there, and it's not uncommon in today's market.
And there's ego, but I got to say, on the commercial side, I think you'd have a hard time finding any business owner, whether male or female, doing a love letter to the owner of a property. But that happens in residential, I guess.
Yeah. So, and we talk a lot about, and particularly first-time home buyers, right? You have this ideal home that you want. You have this ideal business that you want to grow in, and you know what you're looking for. And you talked about if you hit that 80%, right? Go ahead and offer that. Is there ever a time in a buyer's life that they're gonna get that dream home or business,
Subjective, theoretically, maybe yes. In this market, probably not.
Okay.
The dream home usually comes at more of an opportunity in a market that is more favorable to buyers. Say in the recession, you could have got some smoking good deals in 2009 on some really amazing property. So, but I'll go back to my point about how I do share. I want to make 2 points. One is when I work with buyers, a lot of it is me not selling them, me helping them organize their priorities. So they'll come to me with, I want this, this, or this. Well, I'm going to help them sift and change priorities so that so when I say they're getting 80%, hopefully they're getting the top 80 and the 20 maybe down below. But then I'll go back to the other quote about the fact that there is no perfect home. Like I said, big, fancy, expensive properties always have something there that the owner may not like. So I always coach, especially first-time home buyers who have that idea of my dream home. There is no such thing as a perfect home.
All right. Great advice. I'm definitely going to take that. Sometimes you got to step back, right, and let that dream be a dream and be realistic at some point in your life. Real quick, before we go to commercial here, I want to ask you, gentlemen, where people can find you, how they can get in touch with you.
My website is just simply davidmschlatter.com. Okay. SCHLATTER. M in the middle, David M. Schlatter, or my phone cell 720-325-7319.
All right.
Happy to share my cell phone number, 303-520-4034. Email address, John, Jon, no H, at banyanrealestate.com.
Awesome. Thank you, gentlemen. We're going to take a quick break here on Connect and Collaborate. Be sure to stay with us. In the meantime, like and subscribe our YouTube page. Check out this podcast more at cobrt.com/radio-podcast. We'll be right back. Welcome back to Connect and Collaborate. Once again, I'm Alex Hopkins, your on-air producer, and we are talking real estate, both commercial and residential. I have two experts in here with me. I have David Schlatter of David M. Schlatter Realty and John Roberts with Banyan Realty, or Banyan Real Estate, I should say. Excuse me. So thank you again for hanging on here with me, guys. This is a fascinating conversation for me. I'm learning quite a bit and taking notes, and so I know what to look for. But let's talk a little bit. I'm going to change lanes on you here, and I want to talk about this tax bill cut. Obviously, this was a big deal in politics, so we're going to shift our focus just a little bit, if you'll bear with me. But what does that mean for real estate, right? It's been huge in all industries, and I'm imagining that real estate's got some things that are going on there too.
I think if I may, Alex, and John can talk on the residential impacts and so forth, but just in commercial in general, in terms of business in general, without getting into the specific nuances of the tax policies, and there's been a lot of benefits, there's been a lot of argument about it as well and its long-term impact on deficit aspects. But if you just look at what does it take to continue to stimulate the economy, it's had a huge effect on that. Some would argue what's huge, but it's had an effect, and it continues to have an effect. And more money going into business growth, if you like that, then it's very positive. If you have concerns about that, then you're going to have a different attitude about it. Personally, I like business growth in general. And I like jobs. I like seeing the U.S. expand its job base. I like manufacturing, which has been offshored for many decades, partly because of tax policy. I like those things as a person, as where I come from. I come out of the trades. I come out of high school and auto shop. I come out of those things that you work with your hands, and I chose industrial real estate for a purpose as opposed to retail or office and this and that. So I like growth. I like more jobs. I'm going to a big trade fair, as I mentioned earlier in the last segment, that is in Washington D.C. next week regarding Select USA, and we'll have probably 1,000 or more businesses from all over the world coming to look at the U.S. and see it's always been here. It continues to grow. It has more impetus now to see it grow, and we're encouraging that in the U.S. and our companies to bring jobs here and so forth. I see that tax bill as accelerating growth. I see it as a net positive overall, and I fully recognize the downsides and the criticisms, but I see it as a net positive.
I'm going to be a little contrarian to David, just slightly from a residential perspective. Is that personally, tax cut? I believe in the job growth stimulus, all that kind of stuff. That is very much a positive in my book as well, my perspective. But on the residential real estate market, there are some hamperings to that, because if you theoretically look at our market right now, very, let's say, robust, strong, healthy. It was like a adrenaline shot in the arm. And theoretically, it gives more money for people to spend. Theoretically, bottom line, more spend. Well, having more money to spend is just going to make prices go higher. There is a resulting effect on that. That's what's done to the kind of commercial real estate too. Prices going higher. It's like, okay, well, prices going higher, that's not a bad thing. If you're a homeowner, that's a great thing.
Yeah.
So there's the pluses and minuses of that. Just something to be aware of. The one thing I do want to point out, just an interesting, I am going to get into a small nuance on the residential world regarding the tax cut bill, is that there was a provision in it that actually disallowed the deduction of interest from home equity lines of credit. So in the residential world, there is a little bit of, well, it depends on your perspective, I'll use the term negative, is that owners of properties who have what they call HELOCs, home equity lines of credit, their interest on those loans used to be deductible. They are no longer. So that was a provision that took that out. So if you own a lot of property, you may end up paying maybe more in taxes, or outweighing all the other benefits. Maybe it's a net even, but it's something that's there that didn't impact the industry.
Well, I'd imagine that most homeowners that own multiple homes probably renting them out and then just are going to raise the rent, right? So. And
there's that effect.
Okay.
So
yeah.
if you're losing $300 a year in a tax deduction, do you raise your rent to accommodate that? Same thing happens with interest rates too. If your payment goes up, if it's on not a fixed rate, we can get into those kind of nuances. But I did want to point out the HELOCs.
Yes.
In that bill,
did not know that.
The deduction for those was taken away.
I probably shouldn't mention that so that my landlord doesn't raise my rent, right? So while we're on this trend here of politics, so to speak, I want to talk a little bit too about transportation. Huge issue here in Colorado, right? I know that at the legislative session they passed Senate Bill 1, which was focused on the putting some sales tax toward transportation funds, which was very exciting news. It wasn't nearly as much as I think a lot of people wanted, but there's some there. So obviously, transportation, big deal in Colorado, going to have a pretty decent impact on the real estate market. Yeah?
I'll jump in on that.
Yeah,
Alex.
thank you.
And let me clarify. Let me clarify first that because you said that Senate Bill 1 being sales tax is not.
It's Senate Bill 2, isn't it?
Senate Bill 1 is a bonding measure that's been put to the legislature in addition to some monies that won't come into effect until 2019 if two other bills that are being driven by, quote, citizens types initiatives, one being a sales tax initiative, the other being a bonding initiative, and so forth. And depending on the outcome or both of those will determine if Senate Bill 1, which is driven by the legislature this past session, will be necessary to do its own initiative by the taxpayers in 2019. But at its core, it's a bonding measure.
Okay.
And first of all, just rather than just simply look at it, the politics and the net pros and cons about a piece of legislation or otherwise, or your partisan thoughts on politics in general, transportation is an issue. Traffic is an issue. And traffic is an issue of a growth economy. And if you'd rather have the opposite, which is it's never going to be flat. It's either going up or it's going down. And if you'd rather have the opposite and have less traffic and have a dying economy, like in so many other cities and states over the, not so much in the last couple of years nationally, but generally over the decades, then sure, less traffic. But you're always going to have traffic. And whether that traffic is sitting on a light rail line or whether that traffic is sitting in a car, the essence is choice. And what choice do you want? You're always going to have traffic. And so personally, to me, it's about growth in general, and then I choose the traffic by choosing a job. And if I don't like the traffic, then I can move or I can change jobs. And that's the same in a state over state. If you don't like the price of housing, you can move. And it's choice. In the case of transportation and how to finance the transportation, which is a lot of what your question implied, is it something that we need a net new tax dedicated to that, which is what the sales tax people are advocating? And it comes out of a certain portion of the business community that doesn't necessarily reflect the entire business community, but some are arguing for that quite heavily, and they're putting that initiative on the ballot in November. Another line of thought on the bonding thing, which is we have money. We have a $1.3 billion of new money since last year that's come through both in the Trump tax cuts initiative that's made more money available at the state. It's maybe taken some from the citizens, but it's at the state level, and the state is not giving it back. Plus some other revenues based on the growth of the economy. We have the money. Some would argue that, well, we should be spending it for this and that. Those are good arguments to have, but the essence is we have the money. So should the money, which hasn't been funded out of the state budget from the general fund in probably 10 years, should it come out of the general fund and making those priority allocations if it is a problem of the citizens, or should we, on top of $1.3 billion this past year, raise taxes more to then claim that we don't have enough? And I'm of the thinking, without question, that we have enough. And I support the bonding thing. And the Independent Institute has put out a program or an initiative on that once they both the sales tax and the bonding approach get signatures, but we'll know next month, then there'll be a choice for voters to say, do you want a sales tax increase to pay for that, or do you want a bonding that comes out of revenues that are existing and so forth, and put that to the voters in November. And if either of those or both of those actually fail, then we deal with a legislative bonding approach next year, subject to more legislative action in the next session as well. But anyway, that's a broad strokes. Probably said a lot there. John may be able to simplify it a little bit here.
In a fraction of the time, I'll relate it back to my earlier comment about residential real estate, and then it's about priorities. I'm in agreement with Dave is that the state budget is no different than your home budget. You have so much money. And my perspective looking at transportation is that there's $30 billion, that's a round number for the state budget, is the money's there. And about priorities, which is really interesting, is that roads and bridges are not sexy.
What?
I mean, come on. There's your stainless steel kitchen with your solid surface countertops and your designer cabinets and all this kind of great stuff about a house that may be a priority. Roads and bridges don't tend to be what gets people's priority, and it needs to be, and it's been neglected. So just to relate to the home buying experience is that to me is I believe that the budget's there just about making those priorities.
Yeah. Reallocating, right?
That's right.
Yeah. So let's talk a little bit about housing. I know we touched on the affordable versus attainable housing. I'm going to use myself as an example here for as a first-time home buyer. I know that I wouldn't qualify for affordable housing. I make too much, and thankfully so, right? I'm happy to be in a bucket. But attainable housing seems really out of my reach at this point. The average home goes for around $450,000 in the Denver metro area, and I like it here. I like living here. I'd like to live in an area where I don't have to drive 2 hours through the traffic to get to work, right? Walk me through what I can do that I might be able to attain a home.
Without any details.
Yeah.
I don't even know. I could speak in generalities.
Yes.
The first thing is it's drive to you can buy. I mean, and that's there. And so the further out you go from the city core center, prices just impetuously go down as you get further away. So
Yes.
you've got that. The other things that I could say is there's opportunities to go to, say, if single family home, detached single family home is kind of the preeminent. Everyone wants their land, don't want to share a wall. Look at a condo if you can find one, because we have a hard time building them. But that's the most affordable property type there is. That's been a hamper that we've had on the Denver real estate market for the last 10 years, is that because of laws in place, builders can't build condos because it's not a matter of if you get sued, it's when you're going to get sued.
Wow.
Made some progress on that, but a condo or a townhome, that's a product type I build. A townhome is another. That's kind of, to me, the crux, or it's the intersecting line of priorities between a single family home or a condo. So you can look at different product types. Other things that you could do, you can go into, I'm going to make a plug for brokers, and I think David could step up to this when it comes to just brokerage representation. I do this every day. I've been doing this every day for 18 years. One of my dues that we go back to our last segment was interview brokers and find one that you will have confidence in. I don't necessarily want to say most experienced. There is a lot to say for experience, but just because you're someone new doesn't mean they're not going to work their butts off for you and really do a good job. But there is something to say about experience, because an experienced residential real estate broker will know areas to take you that might be in your means that isn't so far to drive till you buy. And so a good broker, I could tell there are 4 or 5 areas in the Denver, I'm going to say city Denver, not even, that's kind of my specialty is central Denver, city and county of Denver. I don't know the suburbs that well, but there are 4 or 5 neighborhoods that I would point you to right now that as a first-time home buyer is going to be more affordable than, say, a Wash Park or a Lowhigh or wherever it might be. So
Go ahead.
You want some of those areas?
Yeah.
I'm going to talk, put me on the spot.
Yeah.
I'm going to tell you just as a generality, Denver Southwest is an area that I think provides quite a bit of opportunity and for attainable housing. It started to spill over. Denver's become so popular. It started to spill over the city and county borders into like Wheat Ridge, that area over just past Sheridan and from the Highlands. I'm a guy that was at the University of Denver, lived in South Denver for a long time. The Inglewood border. Inglewood is a very hot area. Some areas in Denver themselves, North Park Hill, the Cole neighborhood, that's probably a little bit because it backs up to Rhino, has been very popular. I like Mayfair for a really good solid buy. That's maybe not really maybe a little bit tough, but like a more affordable area relative to its location. So those are just some of the gimmies. And I could talk about the specific neighbors. Denver Southwest is in that quadrant with a bunch of neighborhoods that areas where I would really direct a first-time home buyer for affordability and honestly, just great value.
Yeah.
I think I'll just add, just as an individual, as opposed to some commercial real estate overlay, because I'm an individual too, and I bought a home. I was a first-time home buyer, and through the years I've had a couple experiences in that in different markets, so I'm very familiar with that. I think the initial recall that I'm listening to you and thinking about that, it was the first time doing it. And you have all these goals and dreams about it, and the dream home or whatever you want to think of it. Actually, you think of it as a starter. Dream is down the road, but what is that? And so what we had to do was really look at, here's our ideals, and then you connect with a good broker John was talking, generally speaking, somebody that's going to work and know the market, whether they're young or older, and really help you. And part of the help isn't just the market, it's adjusting your expectations and doing it in a way that you'll at least be able to hear. You may not like it. I didn't like it.
Yep.
And I had to readjust my area boundaries in terms of that's the area I want, and I wound up going into these areas. And on the flip side, when I decided, to John's point earlier about priorities in general, decided that, I was thinking it was going to be this much X, and that was the budget that was comfortable, as it were. And it turns out what I really, and I'm not going to get up here, but I really want this, in the middle. So I had to adjust on the income side how I was going to attack that and get that. And so I had to step up there and step down in the location and quality there, but step up in what I was willing to pay for it in terms to get to the 80% that John kind of talked about. So it really, a good broker, hopefully, and a lot to do with the individual, and I believe in that 100%. The broker is just an extension of you. And so you have to be willing to do the analysis and think through and not just be led down a path and blame somebody. You have to be able to do that and then say, what do I really want? This location, okay, we'll find the money. Or this location, it's going to step up, or I really have this fixed dollar amount that I can't go over. Okay, you might have to go out further. Mm-hmm. And if that impacts your job or your school choice, we all have to face that reality.
Yeah, taking accountability for my own actions, what a concept.
Just to echo what Dave said, because he shared a residential example for himself, is that, I'm going to say this very jokingly, I think most residential real estate brokers would agree, though, is that 90% of my work is therapy.
Oh, yeah.
Because it's listening, and because I am a sounding board. Like, I hear your priorities, I hear your wants, I hear your desires, and my job is to give you very straight talk on the reality of what that is so that you can operate it. And that's one thing I've loved about the work that I've done is I don't consider myself a salesperson. I consider myself an advisor, and I'm just here to share the knowledge and information with you to make the best decision for yourself. And I can help you adjust those priorities, and that's how I work with my clients. And I think a lot of professional residential real estate brokers do the same thing.
And to complement that, and even in your case, so to a buyer, whether they're residential or commercial, and they're coming to the market, to this market from out of state, and they're moving here, like yourself some years ago, and you have an expectation. Well, depending on where that market was, if it was a soft market, or you could get a price, you can negotiate it, or whatever. You bring that attitude here. And in addition to just generally people, and depending on their ego or their drive, may say that, no, I have to negotiate. My father wouldn't accept anything unless he got at least $50 off, and he was really driven. But it's not the market for that. And so a lot of it, as John was referring to right there, is educating the buyer or the tenant, if you're leasing property, in the case of commercial, of the realities, and being able to say to yourself the notion that here's the price for $450,000. Okay, should we offer $420,000? Well, do you want the house?
Yeah,
okay.
Exactly.
Maybe you offer $500,000.
Yeah.
And that's so counterintuitive, but that's the reality we work with, and it will reflect how bad do you want that house.
Yeah.
And so forth. And so there's a lot of psychology, as John, he used the word therapy. I don't know if I go that far, but
the residential side, yes.
Yeah.
Because we talk about that emotional component of buying your home.
There's no love letter that a commercial broker's could advocate in my side of the equation.
So we've talked about this, right? There's an influx in the market, and partially because of that, we got back from the recession, but we also had a big change here in Colorado, and that was legalizing marijuana. And if you're going to deny that's had an impact on the real estate market, you're crazy.
Mm-hmm. No, nobody's denying that.
Yeah. Oh, okay. Good. That's good to hear. But yeah, do you mind touching a little bit on the marijuana industry? And because I know they're flexed with cash, right? Because a lot of banks won't work with them because of the legality issues. It's not federally legal. So we're coming to the table with a lot of cash.
Let me say, I took your lead on that, Alex,
Yeah.
and John will hit it from residential and has unique problems in that space, both grow houses and so forth, in the literal sense of a house, residential.
Right.
But so I'll leave that for John. But in terms of commercial, just in a couple things, you think about the cash basis, and so you think about a company comes in there on the legal premise to be able to operate now in 2012, and there's different areas. The good side of it, you set the marijuana and its use and the morality aside, and there are very legitimate concerns about those things from certain groups for sure, not to be understated. But if you set those aside and you look at it, it helped take over a number of buildings that got rid of what would have been considered a lower quality industrial older product that goes for lower, and it helped generate the economy in a large way to build Class A, and it just fed into the growth of the economy. Okay, so that's kind of an economics point of view. But you look at it, particularly on your point about the cash basis being operating there, and say a warehouse that's a grow warehouse and so forth, and they're dealing with cash. Imagine you're not just their safety concerns and their employees, but now imagine you're in an industrial park and this is happening, and your businesses and your employees, or what have you, are over in the building across the way, and they're just getting off work, and there's a robbery that's going to happen at this cash basis warehouse or retail store. It is alarming. It is concerning, and there have been stories around that. And so the issue, setting morality aside and looking at it is legal, it's law here, whether I like it or not, whether I voted for it or not, is law here. How are we going to deal with from the safety components? And so dealing with the financing mechanisms around a legal business needs to be addressed. Federal law needs to be addressed to allow for Colorado to continue its experiment. And so generally I support strengthening a regulatory system that can make it safer in a broad sense, and that sets aside the concerns around this, let's say the smoking or the eating of it, the edibles, in its personal human implications at schools and so forth. I have my own concerns around those things, but the business side of it needs to be done, since it is law, to make it more safe generally for a larger public that's beyond just those who consume.
The residential side, I don't have a lot of experience with any kind of safety issues regarding growing in homes. If you hear the stories, I don't think it's that I don't find it that prevalent. Market side, people ask me all the time, well, how much impact did marijuana have on the market? I honestly think it's there. It's definitely there. There's no denying it, but I think it's small. I tell people, maybe 10%. I mean, because we have a supply problem. So did the influx of business and people coming here for that or whatever, exacerbate the supply problem, or I'll say the demand of the lack of supply. Yes, and so, but I don't know if it's that significant. But I will share on the regulatory side, and I actually had a client recently who was in the business, and it was interesting to work through him on the financing side. Getting loan financing was very challenging, and the only way he was actually able to do it was because he couldn't qualify with his income from the marijuana. He actually qualified because he used some of his marijuana to buy commercial real estate.
Right.
And he actually got the financing based on the assets and the income from his commercial real estate, which was a fascinating, smart play by him, because he wasn't getting it otherwise.
Yeah, absolutely. We got a minute here, guys. Future projections, real quick for me. Where do we think, do we see a cap at all? Do we think we're going to continue growing?
I see strength through 2020 and beyond.
Everything out there is telling me the same thing. The one thing I tell home buyers regarding their fear of buying into a bubble, I already said the worst recession in our generation, and may never see again, driven by housing. There were some neighborhoods that didn't go down. I predict a flattening is what I'm thinking. When it comes, and I don't know when that may be, see a precipitous drop. I think you're going to see time catch up over a 3, 4, 5, 7 year period, and more of a flattening.
Awesome. Thank you, gentlemen. This has been an enlightening conversation. I've had a great time here today. Check out this podcast more at cobrt.com/radio-podcast, and like and subscribe our YouTube page. Thank you so much.
Thank you.
Thank you, Alex.